What is going on, everybody? Welcome to another episode of That Makes Absolutely Zero Sense. Today, we're going to have a similar episode to what we did 2 weeks ago, where I took in questions from this week. It was obviously a very tumultuous and crazy week in the markets, so there was plenty of questions, some good, some bad. I tried to keep it to the good ones, things that I thought you guys would find interesting. So without further ado, let's jump right in. I have my notebook right here, and I'm going to read off the questions and answer them as best as I can. So question number one says, walk through the emotional side of being short sell silver and the thinking behind initiating that. Okay, so first off, the emotional side. I think anytime you go short anything, a stock, an asset, you're betting on the downfall of something. And especially in an asset like silver, where I would compare that to, the GameStop saga or the AMC saga, where there was very tribal behavior, where I would say it's not just institutions pushing silver to new highs. I think there's a lot of retail mania, and that's also sort of part of the second part to this question. What was initiating the idea? I think $100 is a huge psychological level, and I was sort of playing that maybe once it blew through 100 and came back in, that was going to be a sign to sell. I also think just retail driven behavior in general is not sustainable. But we've seen time and time again that retail is a larger and larger force in this market. And I don't want to sit short silver at 98 and a half and watch it go to 140, which for brief periods of today, Thursday, I thought that it might when I was watching it trade in the pre open. And it got to about 108, and I was like, "Ooh, man, that does not look good." Um, but it's okay, covered it. I don't have much to say on the emotional side of it. I think I've done a pretty good job keeping the emotions out of the trading, and I think that's what you need to do if you want to find success doing this. Um, it's just another loser. There's not much more to say than that, and we move on. You live to fight another day, and you find the next great idea that hopefully will make you money. And if it doesn't, you cut the loser small and move on again, try again. That's the name of the game. So, to answer the question, emotionally, fine. What initiated me being short silver? I think retail mania, and it felt like the bid in the market maybe was coming undone a little bit too. Maybe there'd be this risk off move in more than just one asset class. So it was a bunch of things, but again, nothing super rock solid. I had a bit of a gut feeling on that one. So moving right along, I think question one came for my throat pretty aggressively there since I absolutely ate it on that short. So let's move on to question number two. You have mentioned fade the news a lot in the TikTok account. What do you mean by that, and how would one trade it? All right, so fade the news. When I say that, I probably should have explained that more in the TikTok. Fade the news is sort of a phenomenon when, for example, a stock maybe has really high expectations going into a earnings report. Let's say a stock is going to report its Q1 earnings, and obviously the report comes out at the end of Q1, and so you watch the stock throughout the first quarter act really well. Expectations are high, stock keeps getting bought, keep getting bought. Maybe it goes up 10, 20, 30%. There's been lots of examples of that already this quarter. And then when the quarter reports, it's totally fine, great quarter. Maybe they just meet estimates, or maybe they exceed estimates by a little bit. But because there's been so much mania and so much buying and so much excitement built into that asset, when the news finally does hit, and it's what everyone priced in for the past 3 months while while the quarter was ongoing, you get this sell the news event where the event happens and then the stock drops because everyone sort of expected it. And that's a sell the news event. And so if you want a couple of examples, I think Lam Research, tickers LRCX, ASML, tickers ASML, were two great examples of that because the semi cap names acted so well the last few months. I think ASML especially was up 400, 500 points in January alone. Just crazy moves. And then ASML reports phenomenally and gets sold off on the open. And you sort of are left scratching your head there a little bit. But when you understand what a sell the news event looks like and you've seen what ASML has done going into that print, it starts to make sense. So that to answer that question, that's what sell the news means, and there's been a few examples of that already this quarter. Next question is a great one. Okay, so when you have a string of losers and naturally your confidence gets a little shaky, how do you get back to winning again? This comes at a phenomenal time because at the beginning of the month, I had, knock on wood, I don't know where there's wood anywhere here, maybe behind me. I had a great start to the month trading, like abnormally great. Almost every trade I took was a winner. And obviously, the next week or so after that, you have to revert to the mean a little bit. And I took a bunch of losers, no problem, kept them small. It was completely contained, and I wasn't worried whatsoever. Confidence getting shaky as a result of losers. I think if your confidence gets shot as a result of losers, you don't have faith in the system that you trade on. And when I say that, I mean you haven't maybe spent the time or the effort. And I'm not calling anyone out, but I'm just saying maybe you haven't spent those things on going through your trading system and truly figuring out, is it a winning system, i.e., does it yield positive expected value? When I trade, I know that on every single trade in the long term, if I trade every single day for X amount of days, at the end of X amount of days, I'm going to come out profitable because I know what I'm doing. I know to keep my losers small when something doesn't work. Do I make mistakes? Of course. Do I cut winners? Do I cut losers too early sometimes that end up turning into winners? For sure. But it's sort of accounted for that in the model, I think. And so I have confidence in that model that I'm employing when I trade. So if I do have 10, 15, 20, even 30 losers in a row, I know that the next 60 instances are going to be winners, or the next 50 instances are going to be winners. And if I cut my losers at X amount and I make sure to stretch my winners to 3, 4, 5X amount, I'm confident that I'll make the money back. And I'm not worried that I have 10 losing days in a row. So I would say if you are feeling shaky in a losing stretch, maybe revisit your model. Maybe your model is not something you truly believe in, or you're worried that it doesn't have positive expected value. And the second part of that, I think, is losing is a part of the game. If you go 5 days losing and you're trading properly, you're cutting losers small, you're not doing anything erratic or silly or outside of what you normally would do. Obviously, there's experimentation, that's besides the point. But if you're trading properly and you've got 20 losers in a row, I don't see what there is to be so upset about. If keep on trading properly and you'll get your winners and you'll knock it out of the park when they come. For the time being, you're in a lull and it is what it is. And you always come back. I always say you keep the loser small so you always have an opportunity to come back tomorrow and win. Because if you let a loser get out of control, maybe you blow up the account. Maybe you don't trust yourself to trade anymore because you let a loser get so big that you're now trading in fear. And if you cut a loser at some dollar amount that you think is acceptable and you put on some risk and it didn't work and you took it off, I mean, how can you be upset with yourself, or how can your confidence go to the gutter after acting like that? That's the way that you're supposed to act. So, long-winded answer for question number two there. But that's what I think. I asked last week about software. By the way, this is question number four. When I asked last week about software, this week IGV was bad, I think because of Microsoft earnings. Would you change anything you said about software this week from last week? Yeah, so obviously, okay, so it's been 2 weeks, not a single week, but in the last 2 weeks, a lot has changed in terms of the narrative around software. I think today I was reading there's managers out there saying, get me out of this group. Some panic selling. I saw one desk was 10 to 1 better to sell in software specifically. So there's a lot of angst. There's a lot of fear happening in that group. And I know there's a lot of people that say, well, when people are afraid, you're supposed to jump in and buy. Yeah, I want to see you jump in and buy a falling knife. You don't know if Microsoft's going to go to 300. I doubt that it will, but you don't know that. You don't know if the next move in the NASDAQ is down 100 points and then Microsoft actually does test 300, because software is the worst acting group. I think the longer term outlook for software, and again, this is not investment advice, but I think the longer term outlook for software It's due for a bounce. I'm not sure at what point this year that occurs, but I think that group has been almost left for dead. I think after this week and maybe a couple more weeks, maybe get through this quarter of reporting, there might be some good opportunities in software. I don't know that all of the names in the IGV are high quality names. I know I mentioned cybersecurity is one that I like. Microsoft is a name that I like. There's a couple high quality, durable names. So I think be careful with software. Don't dive in, but nibble. That's what I would do. That's what I'm thinking about doing. But it is a precarious situation. And I think people are still sort of thinking that doomsday narrative of AI is going to destroy software, which I don't personally think is 100% true. I don't personally believe that. So that's what I think about software. Again, it's not investment advice. It's just my opinion. And who knows, maybe the IGV goes to 80. Maybe. Let's go on to question number 5, the final question before we end it all off. I fear this market is at a tipping point. Can you suggest some areas to hide if I want to be defensive? I mean, I can give you all of the traditional answers. Obviously, staples is one. When recessions happen, staples act okay. Um, Bonds are one that people hide in. I would maybe go against the traditional grain here a little bit and say there are areas of this market, and I encourage you to explore them. I'm not going to just drop them on here that easily, but there are many areas in the market that are severely undervalued or misunderstood, I should say. Um, do your research. There are some high quality names out there that have been decimated because they're parts of groups that have been left for dead. We just talked about software. I think there's a lot of names in the IGV that are undervalued or misunderstood, or people are applying a AI death narrative to these names when it's not really warranted. And those names, when they report a couple of good quarters and they get like this multiple expansion and re-rating in the stock, could see some severe outperformance in a market that's maybe soft or weak. So software is just one example where you could find some names like that. And there are plenty of other examples as well. I would just encourage you to search for those names, do a little bit of digging on your own, find something that's undervalued, that has a story that's interesting, and isn't just silver hit 100, let's go short sell. That's very unoriginal, actually. So I was dissing myself there in case you didn't realize. So that was question number 5. I've got no other questions to answer. So we're going to wrap up the episode there. Thank you so much for listening. That makes zero sense, the podcast. We'll see you next week with another episode on Friday. This will drop tomorrow, I guess, around 8 a.m. Take care. Have a great weekend, and I'll see you on the next one. The content of this podcast is provided for informational and educational purposes only and should not be construed as financial, investment, legal, or tax advice. The views and opinions expressed by the host and any guests are solely their own and do not reflect the views of any employer, firm, or affiliated institution. Any examples or strategies discussed are general in nature and may not be appropriate for your personal circumstances. Always consult a licensed financial advisor or other qualified professional before making any financial decisions. The host and production team assume no liability for any loss or damage resulting from reliance on the information provided in this podcast.